Hi everyone, let's go over my bullish and bearish Elliott Wave scenarios on Bitcoin, starting on the low time frame with the bullish scenario, where from the high we're looking for a corrective structure to the downside in an ABC, where wave B retraced to the 0.382 Fibonacci, which is a more common target for a B, less common for a wave 2, taken from the high to the low of wave A. Wave C moved to the 1.618 trend-based fib extension, taken from the high to the low to the end of B over here, which is a common target there for wave C. And after this move, we want to see price moving towards the upside, and especially price hitting this 0.618 before taking the low. If price can move to the 0.618, it invalidates a wave 4 for a potential impulse to the downside, increasing the probabilities for price to take this high sooner or later. And that is similar to what we had over here. We had a potential impulse to the downside or a three-wave structure, with wave C being very extended. We wait for a range to form, get more information. The 0.618 was hit here, immediately switches probabilities for the highs to be taken sooner or later. We got a very awkward range during the weekend, but eventually we moved towards the upside. Bullish CVD divergences also played out, and voila. So therefore, it is interesting to keep an eye on that 0.618. The invalidation for this scenario is price moving to the downside and hitting this low over here. Now, if we then zoom in to the 15-minute time frame, we have to look for impulsive structures to the upside from this low here, where we then have to look for a wave 1, 2, another 1, 2, and continuation to the upside. What is awkward though is this blue wave 2. This blue wave 2 is 27 times longer in time compared to wave 1, which is very uncommon for a wave 2. It also retraced very deep, also almost hitting the 886. Now on my chart it didn't, as you can see, but I do know that on some other charts it did hit the 886, and also on one chart the low here was taken, which of course lowers the probabilities of this being a wave 2. A bounce from an 886, like on some other charts, increases the probabilities that the move to the upside is not impulsive but corrective, which therefore increases the probabilities to take these lows at a given moment. If we then look at the white wave 1 and wave 2, we're looking for an impulse to the upside over here in a wave 1, followed then by a W flat X zigzag, and then a wave Y to the downside. Wave 2 over here could be in the low, that is, because a wave Y doesn't have to take the low of a W, but your common target area in general is the 05 to the 786 Fibonacci, taken from the low to the high of this wave 1. If we then zoom out again and go to the bearish scenario, we are looking for an impulse to the downside. So here we want to see this low taken before any 618 is hit. In this scenario, we're looking for a 1, 2, 3, 4 and a wave 5. Common target for wave 4 is between the 0.236 and the 0.5, which is exactly where we are. The 0.382 has been hit over here yesterday at 43,290, and the 05 is sitting at 43.8k. The 618 in this scenario is at 44.4k because these fibs here are taken from the lower high to the low. The 0.618 I showed earlier was at 44.9k, taken from the higher high here of this corrective structure, and just to be more safe, I would pay more attention to 44.9k. However, in this scenario, we are looking for a complex corrective structure in 4 and an impulse to the downside in wave 5. Time-wise, this wave 4 is still okay. We have a fib time on the chart, the vertical lines taken from the low of wave 1 to the end of wave 2, comparing wave 2 with wave 4 in time. And you can see that the high over here has been made between the 3 and the 4 fib time, which is good for a wave 4, but we don't really like to end a wave 4 after the 5 fib time. That would lower the probabilities. It is a wave 4, and the 5 fib time is currently sitting on today, 5 p.m. Central European time. If we more locally look at the bearish scenario, I have a couple of counts on my chart, and we're going to run through this one by one because this range is very complex and I want to actually show you my thought process here. So let's start with the blue count. Here we have a wave A, 5-wave structure. We're then looking for a 3-wave corrective structure in B, and then we want to see a wave C. Wave C is always a 5-wave structure. So we need to count a 5-wave move to the upside in either an impulse to the upside or a diagonal, ending diagonal to finish this wave C. Now in this particular scenario, a diagonal is not really a possibility as the probabilities are higher that this is a flat structure here, and a flat is not allowed in a diagonal. In a ending diagonal, all of the waves have to be zigzag structures, and a flat in a potential 2 and then a 1, 2, 3, 4, 5 is not what we like to see, unless this is the high of your 1. So this is your 1, 2, 3, 4, 5. The probabilities are low, and also the fact this is the high of your 1 and this is your 2 also doesn't carry great probabilities. If we then look at the yellow count, WXY, we have a zigzag in wave W, complex structure in wave X, and then a flat in wave Y. But a flat also ends with a wave C. Wave C is very, very long as well compared to then your A and your B, which also lowers the probabilities for this scenario. Besides the fact that if we look for a wave C and a flat in an ABC, then we also again need a 5-wave structure just like wave C. So we encounter the same problem. If we then look at the pink count, we're looking for a W over here in a zigzag, X complex structure, arguably another zigzag over here to the downside, and then we're looking for a wave Y. Because wave W is a zigzag, wave Y can't be a zigzag in a sideways double combo. You can have a double zigzag structure in a sharp corrective move. So we have an ABC and a W, small X, and then another ABC to the upside in a wave Y. But that means that wave X should actually not go below the 0.7 Fibonacci. However, in this case, it did. So that lowers the probabilities for a double zigzag in a zigzag W, X, and then a zigzag in wave Y. Besides, this structure here looks quite a 3-wavy instead of a 5-wavy, also lowering the probabilities. This is a 5-wave move for a potential 5, 3, 5. And if we then look at the red count, then we are looking at a zigzag in wave W, then we have wave X, and then we're looking for a triangle in wave Y. However, in a triangle, we also want to see a 5, 3, 5-wave structure to then have a wave A. Then we want to see a wave B, C, D, and eventually E before a move to the downside. But then we have encountered the same problem that this move here looks a bit 3-wavy and doesn't really look 5-wavy. So at the moment, it is actually very difficult to count this range like a nice solid corrective structure, and that has an impact on the probabilities that I will talk about in a second. Because if we over here look for a move to the downside from the high, right? Imagine the high is in and we are looking for a continuation to the downside impulsively. We have 3 options: an impulse, a diagonal, or a double 1, 2. Now for an impulse, we want to see a 1, 2, 3, 4, 5 wave structure. But this move to the downside here also looks 3-wavy at the moment, right? 1, 2, and 3 waves to the downside before we got this bigger corrective structure. Now a 3-wave move to the downside is allowed in a diagonal, where we then look for a wave 1, 2, eventually a 3, a 4, and a wave 5, creating a diagonal structure, then a retracement to the upside before continuation. But it is way too early to call potential diagonals here, because we're only at a potential wave 2 then. We still need a 3, a 4, and a 5, and I only like to look for diagonals the moment a wave 4 is pretty much finished. And a double 1, 2 would be a wave 1, 2, 1, 2, and continuation to the downside. But what you prefer to see in a double 1, 2 is a wave 1, 2, 1, 2, 1, 2, and eventually move down, where the second wave 1 and the second wave 2 are a little bit shorter in time and price than the first wave 1 and the first wave 2. If this is your first wave 1 and this is your second, clearly the second wave 1 is quite a lot bigger. And if this is your first wave 2 and this is your second one, then also the second wave 2 is bigger in both price and time, while the first wave 1 and 2 should be your higher degree Elliott Wave count. So it just doesn't work very nicely. If we look at the CVD divergences, we have a bullish CVD divergences. These have been building here. We had bullish CVD over here, bullish CVD here. These played out because the highs got taken. Price moved to the downside, more bullish CVD divergences, but also bearish CVD divergences countering the bullish ones. The small bearish CVD already played out, these lows have been taken, but now we have the bullish ones against the bearish ones, and it is good to be patient and see what price likes to do locally. So if we then go to the probabilities of the different scenarios, then locally here in this range, the probabilities for me are neutral because it is very difficult to count a corrective structure that fits nicely and ends the wave 4 over here. It would suggest therefore that we can continue this range over here pretty much between 43.5k and 41.6k, or potentially have one more leg up. But of course locally we do have the bearish CVD divergences and we have the low time frame probabilities that remain to the downside, as you can see over here, because for an impulse to the upside this potential wave 2 is incredibly long in time compared to your wave 1, 27 times longer. That lowers the probabilities for a wave 2. On some charts the 886 has been touched, and on one chart the low here has been taken, which also lowers the probabilities for this to be a wave 2, increasing the probabilities any move up is corrective and therefore increases probabilities to at a later stage take these lows over here. Of course, we continue to keep an eye on the 618 at 44.8k, just in case price does move to the upside and hits this level first before taking the lows. It would invalidate a wave 4, increasing probabilities to take the high sooner or later. And if price moves to the high of the range over here, we at least have to be aware of potential continuation. We do have the daily naked point of control here still for resistance at 43.5k, so that is still a very interesting level that I keep my eye on if price moves up. But we have to be aware of potential continuation because it is so difficult to end a potential C or a wave Y here. I hope that this video was helpful or valuable to you. Please check out the most recent educational video I've made about the best trading indicator you can use in my opinion, which is the CVD. And for now, thanks for watching and subscribing, and I'd like to see you at the next one. Bye bye.